We're going to do our best to explain to you how you can get PPP loan forgiveness based upon what we know today. We're going to take a quick overview of the PPP loan program. We're going to spend most of our time talking about the forgiveness application itself and the steps required within there. There's a brief example. Then we'll talk about changes that are on the horizon. And if we have time, we'll get to a few questions. So for questions, what I'd like you to do is if you could use the chat feature. Kim is going to keep track of all the questions that you submit, and we'll see if we can go through them and answer a lot of them at the end and see how we can move through. So boy, has this area changed quickly. If you really think today is the 2-month anniversary from when the CARES bill that authorized the PPP program was signed. So in 2 months, we've gone from not having any program at all to really having a lot of activity, and doing a lot of good. But that means that this area is quickly changing. Rules are permanent until they are changed. We've had rules change within this period of time, but that's part of trying to get things done quickly. Sometimes they're allowed to change their minds. The information that is in this presentation is based upon rules through May 25th. There are new rules issued all the time. So some of this things may change going forward, but we really, we got to start somewhere. That's what we're trying to do now is show you where we are today. More rules are expected to be issued soon that may change this advice. So please, please keep that in mind, but that's the way business is. You have to respond to areas of imperfect information. So the first thing, just a reminder, most of you on the have already got your PPP loans, but in case you're one of the people that haven't, or you have colleagues or friends that haven't, it's not too late to apply. Yeah, the first round of funding was $349 billion and was gone very quickly. The second round was $310 billion and has gone much more slowly. So as of May 22nd, over 4.4 million loans have been approved. Those loans are for over $500 billion. Now that means that there's about, depending on how much we have to leave back for bank funding, you know, because the banks are paid a fee to take care of the program, there's somewhere $130 billion left. So you're going to see a lot of articles are saying that, is it because people are hesitant to apply, etc. I think a lot of it is the larger people were organized and got their money in, their requests in quicker. Also, keep in mind that for small businesses, true small businesses, sole proprietors, the rules for how they could even apply were issued within 36 hours of the first round of funding being fully used. So it's mostly the smaller employers that are here at the back side, and but there's still time. Spending the money, nothing's really changed in this. So you can spend the proceeds on payroll, interest, rent for leases, utilities. Technically, you can spend them out on any business debt incurred before February 15th, but this is a program about forgiveness. And if you spend the dollars on other business interests, those don't qualify for forgiveness. So we're not going to concentrate on that. Here's my summary of the forgiveness application. It's really flexible and generous. There's new borrower-friendly options, but options create complexity. So that means you might have a plan A, plan B, maybe you have to move to plan C. If there's only one set of rules, there's just a plan A and it works or it doesn't. So it's nice to know that there are choices, but when you go through, you'll see how some of these choices do create extra work and complexity on your part. Hopefully we'll be able to demystify a little of it. So here is the actual application form. This one page gives you the answer. So there's some administrative stuff at the top. There's some new terms we'll talk about for the, you're gonna mark covered periods and a new term, alternative covered period. You have to mark when your payroll schedule is, that's new, but that has to do with these new terms. You do have to mark if your loan together with affiliates is over $2 million. You may say, why do I even have to bother marking this if the PPP loan amount's up here? Remember, this box is marked if you and your affiliates. You may have an affiliate that has a loan of under $2 million, but you'd have to mark that here. Remember, marking this box means your loan will be looked at much more closely. So how do you do the actual calculation? Or go back to what we talked about. You list your payroll costs, mortgage interest, business rent, business utilities. There's a potential reduction for salary or wage reductions, which we'll talk about later. This is line 6 is math. 1, 2, 3, 4 less 5 gives you 6. Depending on employment levels, you might have to put in a reduction quotient. You may only be allowed a portion of line 6. And then you have to figure out 3 separate numbers. Line 6 times line 7 is a number, or line 9 is the amount of your loan, or line 10, what you do is you take your payroll costs and you divide by 0.75. In other words, you make the number larger. Divide line 1 by 0.75, that gives you another number. You pick the lowest of 8, 9, or 10, and that's your forgiveness amount.
Todd?
Yes?
This is Anna Schmitz with Superior Vending. Quick question on that forgiveness calculation. So when we're looking at these numbers, right, payroll costs, mortgage expense, interest payments, etc., we are taking specifically 8-week period.
The answer to that is not really. It's a little different calculation, and we'll get to that when we get to the payroll costs. So there are ways we can get more than 8 weeks in specific periods. So that's where the complexities come in, because there are some options.
All right.
Well, no worries. So what we're going to do here is then when we look at this, if you look at the top part of the application, just make sure you have the original application and your original loan documents, because there's information you're going to need from there to complete the top part of the form. Also notice that there are some amounts for employees, 1 at the time of the application and 2 at the time of the forgiveness application. Note that these employees are not FTEs. These are employees as defined by the SBA rules. So therefore it is, if someone works 10 hours, they're an employee. If they work 40 hours that week, they're an employee. Just everybody is an equal employee. They're just, then that information is used nowhere else. So don't worry about that per se. I don't know why they're asking for it. They are asking for it. Complete it. Best we can do to make sure the process works forward. Best we can be. Then we look at this covered period. So that's when we're looking at this covered period, it is a defined term. It's 8 weeks, beginning from the day the first proceeds were received. So if your first proceeds were received on Monday, April 20th, the last day we're going to look at the covered period is Sunday, June 14th. That's right. You don't move to the next business day. They are truly 56 days. First day 1 is the day you get the money. The problem is that there's no tolling of the period. If your business is closed, do it to an executive order. That's one of the things you're hearing about, talking about. But that's just what the rules we're dealing with today. The new concept is an alternative payroll covered period. Now, this is new concept is designed to make your payroll reporting easier, because you're going to have to give information to the SBA to pull, and your banker to pull things together. So if you pay employees bi-weekly or more frequently, you can elect to use the period that begins the first pay period after the loan disbursement date. A lot of words. What does that really mean? So if your disbursement date was April 20th, and the first day of the first payroll period, not the payment period, but when you start calculating hours, is after April 20th, happens to be Sunday, April 26th. You can start your 8 weeks for payroll expenses beginning the 26th of April, and it'll end Saturday, June 20th. If you elect this option, you must apply this payroll period to all sections where there's a reference to covered payroll period or the alternative covered payroll period. That's a phrase you'll see throughout there. When they put those two things together, then you must use whichever you so chose consistently all the way through. So you can't choose alternative covered payroll period for part of the payroll expenses and covered period for others, all one way or all the other. Probably the most frequent question I've got is, what if I have multiple pay frequencies? And I'd love to tell you I know the answer, but I don't. So say I pay most of my employees bi-weekly, twice a month, bi-weekly, and I have some employees, I have my salaried employees I pay twice monthly. Now, that twice monthly is obviously not bi-weekly or quicker. What happens? Can I use the alternative covered payroll period? And a conservative reading of the rule says no, because I have to use this for multiple periods. I'm expecting to see future updates that would get this clear, and maybe to say, hey, if the majority of your people are in this weekly or bi-weekly payroll period, I'll let you use that all the way through, but we don't know. Fortunately, we'll have some time to figure this out, but it's up in the air. One of the most flexible things that we're always wondering is, since you're allowed expenditures paid or incurred in this 8-week period, question is, do they have to be paid, and is only for things paid in the period that were incurred in that period? Or they just have to be paid in that period? Actually, what the government did is said, why bother? We'll give them to you both. So amounts paid during those 8 weeks qualify. Also, amounts incurred in that 8 weeks that are paid after the period at the next regular payment date are also included. So in this case, for payroll costs, it's the next regular payroll date. For non-payroll costs, that'd be rent, utilities, et cetera. That is going to be the next regular billing date. So what you're going to find is that this will give people more than 8 weeks. Now, you can count costs as a paid cost, or you can count it as a incurred cost, but you can't count the same cost twice, because remember, most of your expenses are going to be paid and incurred in that 8-week period of time. This adds some additional flexibility. Payments within the 8-week period are allowed, even if the expense is incurred before the period. And if you think about it, your first payroll paid within that 8 weeks is going to have days in it before that 8 weeks, because most of us pay our employees in arrears. They work, we figure out how much it is, and then we pay them. That means the first payment will have some periods before. That's okay, you count it because it was paid. Now, prepayments are allowed. There's a minor exception for bank interest. That means bank interest cannot be prepaid. But remember the adage about pigs and hogs. Because that is, pigs get fat, hogs get slaughtered. So the ASBA has in the rules that the reason they allowed this flexibility is they expect it'll have de minimis impact. So if you plan on prepaying 6 months worth of rent in the covered period because you want to use up some of the extra PPP loans for forgiveness, it's likely that that will be looked at, okay? Because it's not, has more than a de minimis impact. Now, the de minimis impact is not written in the specific rules. It's talked about if you look in the lending documents, the notes to lenders. So what we want to do is be a pig, not a hog. Payments after the 8 weeks are allowed if paid within normal times and if the expense was incurred in the 8 weeks. So using both paid and incurred, you will get more than 8 weeks of expenses. Profit sharing issues. So for union plans, you're going to pay these just as normal. There's a normal payment date, clearly when the expenditure is incurred, clearly when it's paid, no problems. The 401k match, well, what you're going to do is follow your normal process. So if you're making monthly 401k match payments, pay as normal. There's a normal payment date, normal process. I think you'll be fine. Now let's talk about just a traditional profit sharing and defined contribution plan that many of us have. So you may put in a percentage of compensation. Typically, you wait until after the compensation is fully known and then make one lump sum payment. So for a calendar year plan, you can make that payment as late as September 15th or October 15th if you extend your tax return. Well, let's be realistic. Do you really think that the government's going to give you till September 15th, 2021 to make this payment? Technically, that's when it's due. But realistically, if you want that employer discretionary payment, you're going to want to make sure it's paid within the covered period. So you may want to call your profit sharing people and see if there's a fund you can make a pre-deposit to allow you to make that deposit within the covered period and allow for forgiveness and allow you to allocate the expense later. So now we're to wonderful page 2. So for wonderful page 2, we're gonna, there's a lot of certifications. We're not gonna go through all these. I wanna point out 2 things that we're gonna talk. One is just to point out, 2 is one thing we're gonna spend some time talking about. They're both in this first certification. The dollar amount for which forgiveness is requested, you have to certify it does not include non-payroll costs in excess of 25% of the amount requested. This does not mean that you cannot list more than 25% of the forgiveness as non-payroll costs. You will list what it really is. You can still make this certification because the math of the form will make sure that this certification is accurate, because line 10 on the first page limits the potential forgiveness so that no more than 25% of the forgiveness is for non-payroll costs. So don't let that one scare you. The second is watch that owner employees are capped out at $15,385 per individual. We're going to talk about that a little more down the road, but here's where that is also noted. The third form here is where you're going to put things together, and this is the Schedule A. So Schedule A breaks out payroll into the following groups. You have Table 1, and the key thing about Table 1, it has this line 3 right here. That is a potential salary and wage reduction. None of the other categories have that. You have to look at FTEs and cash compensation. Table 2, this is where you're going to want most of your employees if possible. You have cash compensation and FTEs. Notice no box up here. Then you have non-cash compensation costs. But you're going to put that in the list here. Notice that, or alternative payroll covered period. So these also, you're going to use the same period as your payroll, whatever you chose. Then all the owners are grouped together in line 9. And then we add up the compensation paid, which is 1, 4, 6, 7, 8, 9, 10. We'll talk about the full-time equivalents are also on this form. We're going to talk about that later in the presentation. So how do you put this stuff together? You have to, there is a table that they're looked for. Isn't that nice? So we're going to talk about these words, but we want to point out to some key words. At an annual, this sentence right here is very important. We're going to received compensation from the borrower at an annualized rate of less than or equal to $100,000 for all pay periods, or were not employed by the borrower at any point in 2019. So then you got line 2 is the next group. So Table 1, we're going to, we want as few as people possible at Table 1. So we're going to exclude owners or anyone who made $100,000 in 2019. Those were easily identified. Anyone hired in 2019, but anyone who received a bonus or commission that would annualize to over $100,000 for 2019. It's at any payroll. So here at JK, we pay bi-weekly. So if I had one payroll of over $3,850 to any one employee, that would eliminate this person from Table 1, even if all the rest of the period of the time they're substantially under that. So how much effort do you want to put into it? Just depends on how much of an issue it is, but there's ways you can look to help reduce the number of people in Table 1. Owner compensation is its own group. For those of you that are S Corps and C Corps, unfortunately, now you're grouped into the same category as those of us that are partners and sole proprietors. So they are labeled it as owner compensation. Therefore, it covers cash and non-cash compensation. So remember that $15,385 cap? You're capped at $15,385. You would, that includes your W-2 plus your health insurance plus your profit share for that period of time. I know you didn't apply that way. I didn't apply that way, but the rules have evolved, and that's where we are today. So who is an owner? It's likely it's just any percentage, because you'll see different things out there. See a 20% percentage, but that's really a definition for a principal. Those that had to certify to the sign off on the certifications. Do I look at attribution? I think it's unlikely because remember, when you applied originally, you did not include attribution. And attribution is an income tax concept rather than a banking rule. But I think you may have to watch for future guidance. Why do I say that? Is it's too easy to play with family members and trying to work around some of the rules. So we have to watch what they're going to do in that area. If you happen to be a Wisconsin person, remember, it's not by attribution. Both spouses own the shares. It is by operation of the community property laws. So in that circumstance, you likely would still be an owner. But that's a Wisconsin issue, not a Minnesota issue. There is a tighter employee cap, and this gets down to that last certification that I brought up on page 2, and that is your compensation is $15,385 for everybody. That's an 8-week salary of $100,000 rounded up to the nearest dollar. It's an employee by employee test. And that's going to include both your payroll paid and incurred. It's the payroll that you're going to put on the form. For owner employees, self-employed individuals, general partners, the cap is further reduced potentially. It's the lower of the amounts paid and incurred, that you're going to put on that form, or 850 seconds of $100,000. That's the $15,385. Or 850 seconds of the applicable payroll compensation for 2019. In other words, they don't want the owner employees to get a bonus just to get debt forgiveness if you did not follow the same policy in 2019. In other words, if you hadn't done it in the past, we're not going to let you do it this year. Now, does that mean that maybe 2019 was a low year and you didn't get your bonus is always paid in arrears, and maybe 2018 was bad, and so you didn't receive a bonus in 2019. 2019 was great. You received your bonus in 2020. I'm sorry, that's not how that's looked at. It's going to be looked at in what you actually got in 2019. For partners and sole proprietors, you look at your 2019 Schedule C or K1. So that, by definition, you'll be at 850 seconds of 2019, and that'll equal 850 seconds of 2020. You do not get to add in health insurance and profit sharing because the way they look at it is, since those deductions happen after your K1 income, you've already got those in there. Just means you can't move above that level. For general partners, you are supposed to multiply this by 0.9235 to take into account half the Social Security taxes. So notice it's 2019 income. That also means that if you have partners that left in 2020, I think I still get to count them for 2019 because I look back to 2019. If I have new partners in 2020, and so they're not going to get a W-2 in 2020, I don't think I get to look back at their W-2 in 2019 because it's only the K1. So there's going to be some winners, some losers. Maybe some people that left, I get to count. Some people that are added in, I don't get to count. What are payroll costs? What do you think of compensation, salaries, wages, bonuses, tips, health benefits, retirement plan contributions, and state unemployment taxes? I want to specifically talk about bonuses. There's been a lot in the news. Basically, bonuses are payroll costs. But that doesn't mean that all bonuses are equal. There's limitations. Remember, the cash compensation cannot exceed $15,385 for anyone. So if you have somebody that's already above that limit, paying them a bonus does not increase debt forgiveness. I'm not saying don't pay them the bonus because maybe they have earned the bonus. But what I am saying is it will not increase your PPP loan forgiveness. Also, a bonus to a owner can be further limited because you have to look back at what it was for 2019. But rank and file employees, people are making under the 15,385. Bonuses paid to those, be it for performance, hazardous, or just because you don't want to pay the government back the money and you just want to use it up to give to them, that works. But just keep in mind that not all of them are created equally, not all will be used. What are excluded payroll costs? So excluded payroll costs include compensation above $100,000. You get a count up to 100, and if it's non-owner W-2 employees, remember I get to add benefits to that. Wages, where you take the family first credit, that's where if your revenues dropped and you retained employees, there's a potential credit you can get for 50% of the wages. That's great, but they won't let you take the credit as well as the forgiveness. Or wages paid to people living outside the United States. And although the statute itself, talk about the CARES statute, has an exclusion for payroll costs for taxes withheld from employee paychecks for federal withholding, Social Security, Medicare, guidance shows from the SBA that we're going to use gross payroll and ignore that provision. It was just a badly drafted section. But not all payroll costs are included. For example, work comp, insurance, and Social Security and Medicare payroll taxes are not considered payroll costs. Getting questions about payroll reimbursement, because the best practice is to put your payroll in an account, your PPP loan in an account, pardon me, and then to transfer monies from those accounts to pay for the eligible expenses. That way you can show that, yes, the loan was used for eligible expenses. There won't be a question. If you do that, you want to reimburse the gross payroll. For medical insurance, you want to reimburse the employer portion only, so you're not going to reimburse for the employee contributions towards the insurance, because those will be on a pre-tax or post-tax basis, because the pre-tax amounts were already reimbursed as part of the gross payroll cost. Same process for HSA contributions, 401k and the match. You can do the match, but not the 401k withholding, because that was reimbursed as part of gross payroll. But let's get back to our friends, table one. So on table one, just to be clear, one thing I did not mention is the employee identifier is the last 4 digits of the Social Security number of the employee. We're talking about cash compensation. The next thing we're going to talk about is FTEs. So what we have to do is first we have to choose a reference period. You choose. So you're going to always choose the lowest result between February 15th of 19 to June 30th of 19, or January 1st of 20 to February 29th of 20. Your choice. What I'm hearing is most people are using January to February of 2020, but see what works out best for yourself. If you're a seasonal employer, you have an additional choice of any 12 consecutive week period from May 1st to September 15th. Why would you look at those periods? Well, think about, if you're a seasonal employer, you could be a ski hill, say you ran after the Alps. Of course, you would have a lot more people in the winter, and you really don't have many people in the summertime. So then you pick the summertime 12 weeks to help get that period of time down. Notice that owners are not considered an FTE. Evidently, it must have been drafted by one of my staff. They decided that the owners really don't do anything. So we're not counted in the reference period or in any of the covered periods. So now when we're looking at now what is an FTE? Well, we now know what the hours are. Never knew. The hours are 40 hours. I've been talking to people about 30 because that was some initial talk. Well, the rules came out 40. So you look at your hours per week, you divide by 40, and you round the result to the nearest tenth. But the maximum for any employee is capped at 1.0. So if your employees are working 45 to 55 hours a week, they're counted as 1. So if you have someone that works 32 hours a week, that'd be 0.8. If they're at 20 hours a week, it'd be at 0.5. A choice 2 is you could say anybody who works 40 hours or more per week is 1.0. And anybody who works less is 0.5. So my example above, if you work 32 hours, 0.5. If you work 20 hours a week, 0.5. So in choice 1, my 2 part-time people add up to 1.3, and choice 2, 1.0. What is best? Like all good answers, it depends. You're going to have to do some math because it's a ratio, and you have to use the same option for the reference period as you do for the covered period. So what happens if some people are no longer full-time employees and has nothing to do with business? I mean, people that chose to leave or chose not to come back. Well, if you made a good faith written offer to rehire an employee, which was rejected by that employee, and why would they do that? Well, some people are making more on unemployment than they do working due to the augmented federal unemployment. Well, if they don't want to come back, you don't have to count them as a reduction in your full-time equivalents. A new thing that's there, now you have to report this to the state unemployment office within 30 days of the rejection. That's a new thing for that to qualify. Secondly, if you had an employee that you fired for cause, or if you have an employee who voluntarily resigned, or if you have an employee who requested and received a reduction in their hours. That last one I think we're going to see more frequently with people staying home and homeschooling kids not by choice. Just kind of keep that in mind. Those are some things that if we have that documented, that will really help. So then what we're going to look at, this is the math to figure out the safe harbor, because we haven't calculated enough different options. There's another one. And the logic here is if you had from February 15th of 20 to April 26th of 20, that's 30 days after the bill was signed. If there was a reduction in full-time equivalent employees relative to February 15th of 20, and you bring back your employment levels by the end of June up to that level of February 15th of 20, all the other calculations for FTEs are moot. So if you get your employment back to the June 30th, 2020 levels, it doesn't matter because you're just going to show that the ratio you're going to use is 1.0, and therefore there's no actual reduction. So we're going to, so this is just a summary in short words, that whole example there. So that leads to some planning opportunities. So that last week of June, I think you're going to be looking at a bunch of things. You're going to be looking at requesting people to work more hours, get more full-time. Maybe you're going to decide that you're going to have extra PTO days that week. You're going to give people some extra PTO so that you get them to full-time. Maybe you'll consider hiring people for the week, like maybe to landscape outside your building. In other words, it doesn't even have to be the same type job. In other words, if I'm coming up with these kind of options, there's people smarter than I that are coming up with even more options. So we're going to watch for these potential changes, because I think they're going to worry about people playing too many games in this area, and they'll work to restrict them. All right, We're almost done with the tables here. Remember, back to our friend table 1, we have to worry about forgiveness is reduced if an employee making less than $100,000 had their salary reduced by more than 25% over the most recent full quarter. Well, English, you look at what they made January to March 2020, and you look at what on an annualized basis. Compare that to what they earned in the covered period on an annualized basis. So there's another safe harbor, same type of concept, meaning you look at the annualized wage for 215.20 to 426.20. That is less than what it was for the period that includes 215.20. And get back by the end of June to the level of 215.20. You met the safe harbor. You don't have to worry about all the others. So here are the steps right from the form, but I want you to concentrate on enter the average annual salary or hourly wage during this period. That math probably sounds pretty clear to you, but is it as clear as you think it is? For a salaried worker, it's a straightforward. I think you're going to look to see, well, here's my salary was, $8,000 a month, and now it is $5,000 a month. Well, that's 3 divided by 8 is 37.5% reduction. That's pretty, we had a pretty large reduction. I could figure that out. But when you're an hourly worker, the SBA realized that if I have a reduction in hours, I have two things that are crossing over, that are intertwined. I have a reduction in full-time equivalents, and at the same time, I have a reduction in pay. Well, they didn't think it was fair that you should be penalized for both reasons for one event. So what they said is, we're going to concentrate on the full-time equivalent action of this. So if your full-time equivalent reduced is your full-time equivalent's changed, we're not going to worry that as long as your hourly rate is the same, all is well. It's not a reduction in wage. So there's a minor quirk. What do you do if someone's working more than 40 hours a week? Their FTEs, and they dropped to 40. Their FTEs would have dropped, wouldn't change, but their hourly rate, including their overtime, would have changed. I'm taking the position, I'll just let you know that if my pay rate didn't change, I really didn't have a reduction. But there might be future guidance that might say something different, because I have to look at the actual pay rate for someone who was more than, who didn't actually have a reduction in their FTEs. Documentation, it's kind of the stuff you'd think. I'm just going to go through these really fast because you can look at these later. FTEs, same type, you have to have payroll reports that help document this. Non-payroll documentation, the quirk here I wanted to point out is you have to show for February 20. Why? You had to show that the services or the expenditure actually existed February 15th, 2020. You have to cover the whole covered period. That makes sense. And for 1 month after. Why 1 month after? That's to cover the incurred and paid issues. Because everything I would expect would be paid within that 30 days afterwards. You have to hold on to documents. That's good. So you're going to hold on to, your table 1, table 2 employees. You have to hold on to your documentation for your FTEs. Document your certifications. You're going to retain this documentation for 6 years after the date the loan is forgiven or repaid in full. And if you have to allow the SBA access to this documentation upon request. Now, if you think we haven't done enough yet, let's talk about, there's optional reporting. You can report some demographic information on principals. Well, quite honestly, that last sentence that says disclosure is voluntary, will not have no bearing on the loan forgiveness decision. My personal bet on the over-under of this being reported on people is 1. I mean, why would you bother? For self-employed people, what do we look at for forgiveness? Nothing's really changed here. I just want to put it in a nice little summary for you because there's many self-employed people. So you get, if you have employees, you get to count that. Your compensation is based upon 2019 profit. Should get interest, rent, and utility for obligations of your business that existed as of February 15th of 20. So how do you look at increasing forgiveness for the self-employed? One of the things you could look at is maybe amending the 2019 return to slow down depreciation in 2019 and thereby increase forgiveness. You can consider hiring family members. This gives you wages and maybe benefits such as health insurance for 2020. But remember, you're gonna have to file those pesky payroll tax returns. And most importantly, the hiring has to have a business purpose. If it doesn't, then you really can't take the expense on a Schedule C, and that eliminates the whole purpose of doing this. You can pay a related business that you own rent. There's no prohibition against that as long as you had the lease in place. Utilities, depending on where you're at, you have electricity, gas, water, telephone, transportation, and internet access. They all qualify as utilities. So in the self-employed guidance, they did say that gas use must be qualifying. Transportation, utility, so you do get the gas for your vehicle. That's not the same as cents per mile. That covers a lot more than the gas. Depending on where you are, I know we have some people that are outside Minnesota listening. So some other utilities such as garbage, maybe security monitoring might be classified as a utility, but work with your lending institution because they make the decision. Some quick tax issues relative to forgiveness. Are the forgiven proceeds taxable? No. That's right. I said actual answer here, direct, because of the next part. Are the expenses paid with forgiven amounts deductible? No. Now, maybe that's not what Congress intended, but they didn't say anything different. They only talked about the proceeds. There's already a code section in place, 265, that says that expenses for tax exempt, that generate tax exempt income are not deductible. This is why we can't deduct officer life insurance expenses, because when you collect on the policy, it's not taxable income. So the expenditure of the premium is not deductible. Here, we have the same issue. I'm expending these dollars for forgiveness, generates forgiveness, therefore the expenses aren't deductible. Now, to put it all together in an example, so these dates, they were not structured to hit a result. Quite honestly, it's the exercise we had to do here at JAK. So the date of our application was April 9th. The date our funds were received, April 23rd. This 14 days, just to put some dates in later, I'm going to assume we're going to do our forgiveness application 14 days after the last expense that we can qualify. We pay bi-weekly, so the first pay period beginning after April 23rd happens to be Sunday, May 3rd. We pay on Wednesdays after the pay period. That's just the way we do it here. Now, another assumption I made for simplifying is we're going to pay the expenses for health insurance, rent, and utilities on the 25th of each month. Everything's going to be paid timely. For the utilities as they're due, the health insurance and rent are also paid, you know, the month ahead, like most businesses do. So what does this mean? So we have options for expenses. So our covered period begins the first day the dollars came in. That's Thursday, April 23rd. ends 8 weeks later, which happens to be Wednesday, June 17th. The alternative covered payroll period, that's going to begin May 3rd. Notice that's not on a Wednesday when we pay. It's the date that the pay period begins. May 3rd, ends 8 weeks later, which gets us to Saturday, June 27th. So if I look at my payroll, if I use the covered period option, I will have 4 pay periods, 4 payrolls paid within there. May 6th, May 20th, June 3rd, June 17th. In addition, I will have the payroll for the 15th, 16th, and 17th of June. That'll be paid July 1st. I will get that. So I'll have 8 weeks of payroll plus 3 days. Now, in our case, the alternative payroll covered period, coincidentally, I have the same exact 4 payrolls that are there, the 6th, 20th, 3rd, 17th. But I will also have the incurred payroll from the June 15th to the 26th of June that is paid on July 1st. That's another 2 weeks payroll. So I'll have the 8 weeks paid plus the 2 weeks incurred and paid in July. It's just the way it works. So in this case, it's highly likely I will use the alternate covered payroll period. Health insurance follows the payroll choice. So if it's a covered period, it's paid April 25th and May 25th, because those are the 2 periods that fit within there. I'll have no incurred add-on as the May 25th payment pays out to June 30th. Yes, I'm taking a prepayment following normal business practice. So I feel very comfortable with that. If I use the alternative period, I'll have May 25th and June 25th. Because remember, my alternative payroll period, I can't pick up the April one because my date doesn't begin until May 3rd. I'll have no incurred add-on again because the June 25th payment pays all the way to July 31st. Rent and utilities, I have to use the covered period. So for the rent, it's going to be April 25th, May 25th. There's going to be no incurred add-on because the May 25th payment covers out to June 30th. Utilities, April 25th, May 25th. Remember my simplifying assumption, everyone, all payments are paid on the 25th. There will be an incurred add-on because the utilities from May 26th to June 17th, that portion of the utilities will be paid on June 25th. So I will get 23 days of additional utility expenditures on that June 25th payment. Here's all the FTE comparison dates. All these are potential options depending on how many people depending on how things go. Salary reduction. These are the potential dates I need to look at based upon actual, based upon safe harbor. Then here's where the other dates come in. So I need to, on April 9th, that's my application date, I need the number of employees. July 15th, in my example, that's my forgiveness application date, I need the number of employees. My forgiveness decision, we haven't talked about that, but that is written as 60 days after the time of application for forgiveness. That'd be out to as late as September 14th. And then that means if I had 100% forgiveness by September 14th, then I'd have to hold on to those records for another 6 years later or out to 2026. Well, thanks for sticking along so far. We're almost there. We've talked about a lot of stuff. So now I want to get back to basics. What is the purpose of a PPP loan? It's to provide relief to America's small businesses expeditiously. That's written right in the SBA docs, the stuff they put together. So that's nice, great summary. And Congress is finally understanding what that means. They understand that the PPP program is different than an unemployment program. It is not an unemployment program. We have a separate unemployment program. We have to keep the businesses going. So when I stepped away there, they're talking about, we're getting some traction on this bill. It's called the Paycheck Protection Flexibility Act. So I have to read here. It's not in the notes because it came out in the last 30 minutes before I started the presentation here. It would potentially allow businesses to increase that period of time from 8 weeks to 24 weeks. It would remove some of the limits if you weren't able to rehire people. It would get rid of the 25% cap on non-payroll expenses. It would give you more time to hire employees. So there's more time to pay back the loan back if you couldn't. So the difference here is some of the readings is it has some backing from both Pelosi and Trump, which are not people you expect to be together. Let's look at a separate bill that could be brought up yet this week in the House, maybe next week in the Senate, because we're running out of time to forgive. I would advise you to do something. We've got this potential thing that would turn everything up on its head. I have the SBA that may be issuing more rules. I had to go through an additional 45 pages of rules that were issued last Friday. Don't pay the loan back early. Wait. Because remember, you're only allowed one PPP loan. And if you pay it back and then the rules change, allowing you to get what would have been forgiveness, I'd feel very sad for you that by just paying it back early, you weren't allowed the opportunity for forgiveness. So patience is important. Let's work through this together. We'll keep you updated as often as we can, as things really warrant. I know I'm about up to my time here. We've covered a lot of ground. If you want to contact me directly, there's my phone number, email. It's been really amazing to go through here. I'll take time to answer a few questions. I understand many of you will have to drop off. With that, I respect and I appreciate you taking the time to sit with us together. Have a great day and stay safe out there.